Alright guys, I'm going to take you through a daily analysis of the EURAUD. I'm going to try to do this a little bit differently. I went through the chart and kind of just drew in the major areas of support and resistance using the 15-minute chart. So basically, another way you can do this is what I'm about to show you, which is open up, if you're trading using usually the 5-minute chart, then open up the chart that's one time frame larger. For example, if you usually use the 5-minute chart, use the 15-minute chart and analyze the major areas of support and resistance from the day before and past few days, okay, 2 to 3 days before the next trading day. Okay, so for example, if I were analyzing yesterday's or this chart right here, now this is after the markets close and open again, so that's why it's showing a new day here, even though it's still, for me at least, it's still Thursday. So over here it's showing Friday already. However, I'm going to be pretending as if this is the day I will be trading, and so I would put in my lines with the major area of support and resistance for the past few days, so 1, 2, 3, 4, and 5 days. Okay, just putting in major areas of support and resistance. You don't have to be exact necessarily, or else you'll have a lot of lines here. So just put in the major ones. So for example, I put one here for the past couple of days. It came up here and it came up here again and bounced off, and it kept on resisting that area. So I think that's probably a resistance area over there. And remember, this day hasn't happened yet. The one I'm highlighting right here has not happened yet. So I'm only taking 1 and 2 lines here. Over here, I put this in the wrong place. No, there's a reason I put it there. Oh yeah, that was because of this sharp bounce over here. But I'm going to remove this here, and instead I'm going to place one right here. So basically came down and then bounced up, came down, and it did have a resistance. Even though it broke it, it acted as a point of resistance for a while. Anyways, continuing on, it also came down all the way here, and this is the lowest point of support at this point, so I put a line over there. So now what you want to do is, once you go into the chart, okay, this is how it starts right here. Okay, so basically your major areas of support and resistance are drawn in from the 15-minute chart. Now you want to change to the 5-minute chart and analyze this trading day here. Okay, so then basically start off here, and you want to draw your 5-minute support and resistance, maybe with another color now. So maybe you want to put in as blue for 5-minute. And let's change that to default for now. Okay, so then it bounced up here, came down. Now you want to watch your wicks. Now it's not going to be exact. The 15-minute is not going to be exactly fitting the 5-minute, so you can adjust it to accommodate the 5-minute. So it looks like it should move down here a little bit. Since it came down here, notice the stochastic was under the 20. A nice wick, so stochastic under the 20, nice wick over here, and it's a major and it is a point of support, so it's a good opportunity for you to take another 5-minute trade on the upside, and you win that one. So then it comes up here and establishing some sort of resistance or support. Now notice this, the stochastics came up, but this candle closed above this resistance, so you're not placing any trades here. Even though there's a wick, it didn't bounce up off of this. So even though the next one could be a red one, it's not. If you want to stay with your rules, you want to stay within the confines under this lines or under this resistance line right here. So it closed above and then started retracing. Now notice old resistance became new support, and it bounced off here and it went up. Now if you're a stochastics follower, then that rule does not meet, because that condition is not met. It's still over 80. So either you can be riding a trend right here, or you could be trading very strictly just with stochastics. For example, right here it hit a point of resistance, which was the old resistance from yesterday. So when it came up here, notice the stochastic came over 80. This is a point of resistance. The only thing that there wasn't there was a wick, but you could have been confident already that stochastics and the resistance is good enough for you to take a trade to the downside. Now, what time frame should you take the trade? If you're taking if if you're using a 5-minute chart, either take a next candle trade, meaning take a 5-minute trade right at the opening of the next candle so it rides down, or you can take a 10 or 15-minute trade depending on what broker you use. For Markets World, you can use 10-minute trade. They don't have 15-minute trades, but if you're using Boss Capital or Titan Trade, you can take a 5-minute trade or usually 10 or 15-minute trades as well. So then basically it drives down here, and then you want to see where this kind of is going here. So basically rides this support and then a long wick, and it just shoots right up right there. And then you see there's another point of resistance here from the 15-minute chart that we drew on in yellow. So let's see if we have to make an adjustment on that. Yeah, it looks like we do. Remember, the 5-minute and 15-minute won't match up exactly because their prices fluctuate. But notice how that major point of resistance, it shoots up probably because of news and hits that point of resistance, and you know right there that you could, if it shoots up like that large and it's hitting a major point and it touches that major point of resistance, keep this in mind. Notice that it touches the point of resistance and it bounced back down. Okay, at least for the next half an hour it'll be down, and in this case it did just that. It was a huge red candle. It hit that major point of resistance, which is a 15-minute resistance, and it shot back down. You could have placed any number of trades here and been in the money for all of them. Anyways, continuing on, so now you're drawing new support and resistance for the short term. So you got your 5-minute blue lines here, support and resistance lines. Now it comes down here. It doesn't meet your stochastic condition, but it has a nice candle or a wick there, and it bounces up. Now you're not placing any trades here because you're establishing support and resistance at this time. So it moves up here, it touches this, and it bounced down. So here, when it closes right underneath there, you could take a 5-minute put option and you would have won that. 15, 20, 30 minutes, you would have won that. And it comes down here again, retests support. Based on this wick is not that great, but it does close to that support line, and it comes up for 5 minutes, 10 minutes. You could have placed a call trade and won that, and just basically hovers here and there. You see these wicks here is holding that support really nicely, and it comes up here, and now see it doesn't even fake you out. It actually just breaks through that line, and it comes back, tests that old support is a new resistance, and it rides down. So once you see something like this happening at this touch, you can trade. If you're confident that this support is going to be new resistance, which usually is the case, then you could place a trade right at the touch of that line, or you could wait for something like this to happen where it closes close to the line, and you take the starting of the next candle for a 5-minute or 15-minute, whatever it is, and you're good to go. And then it's just probably starting to ride down a little bit. So now it's just doing range market. You could place a basically you should be good to place a support and resistance line if it goes down wherever there's a long wick. So if you notice, this wick came about, okay, and when it broke this wick, okay, so let me put a line over here. Okay, this wick came, it stopped here, and it went up. This nice long wick came, stopped here, and went up. So that means when it breaks this, and this one goes up, this is probably going to be a new area of temporary, very temporary resistance. Because when it touched it, the next candle was red. Now remember, I should emphasize that you should think about this in red and green as well. Whether you could be able to guess what the next candle is. If you master that, you will become a master in this industry. And if you become a master in this industry, then you're set for life. But basically, if you can determine what candle the next one is going to be, red, whether it's going to be green or red, then you should be able to do this really easily. Okay, now I'm teaching you how you can master that. So anyways, it goes down, basically goes down. So we're now watching it. I'm not gonna put all these small trades in here, like, and this is what I do on the offside. I haven't told you guys yet because it's a little more complicated. It's a little more detailed, and I don't know if a lot of you are ready for that. But basically, I do place trades such as these ones where I see a long wick right here, and I see a green one, and I see another long wick here. I would place a trade for 5 minutes on the next opening of the next candle for me predicting it was green, and I would place a trade there and I would win. That's how easy it is, because then you see a nice long wick here, which is testing old resistance, which is tested here. So with that long wick, you already know that maybe the next one's going to be red. Okay, so it's all about the wicks and how the candles look and where it's hitting on the support and resistance. Now, people who aren't listening to this, listen to me. This is how you trade naked markets. Indicators are lagging. They will not tell you where to trade necessarily. They'll reinforce your trade. They will tell you, yes, this is a good trade to take. Your probabilities of success are going to increase with the support of an indicator. But if you can master reading the chart, you will never even need an indicator. Okay, moving on. So then it comes down here. See another wick here, and this was a wick with a green candle, so it's already gone up. You don't know if the next one's gonna be red, so you don't take these kind of trades. Okay, if you see, actually, I'm gonna have to give you an example, but anyways, let's just move on for now. So it breaks this temporarily. Okay, and then look at that. And the green one comes up. Think of this as happening in real time. Okay, now imagine this red one coming up. This line is already here because of this resistance points here. So this line is still here. It comes up here, and this point in time, it opens here. At some point, touches it, and it goes down. If you're confident that this is going to maintain its level of resistance, especially with this kind of wick, then you can place a 5-minute put option at the opening of this candle, and even if you're in the money with this candle, you can place another one, or you can wait till it touches again. See, it touched again with a nice long wick, and then it went down in red. Okay, and so basically, so on and so forth. This is what they do, and now you're just watching to see what happens at this point. I'll just leave it for now. See another wick right here. It hits that resistance. You can easily place a put trade for 5 minutes, knowing that it's going to go down. Here, if this green candle happened, you wouldn't place any trade because there's no wick. If you're not trading this level of detail, then it is important to notice the wicks. So it basically goes down, and then here, oh man, this is just too easy. And then basically it just goes down, 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 down. Okay, so it's not doing anything with this line here. But you should always notice where the prices are bouncing off of. That's very important for you to learn that. So we'll adjust this 15-minute support line to more closely match the price at the 5-minute chart. And so it just ranges for here. Now you could have gotten at least 6 successful trades already, just by using level of support and resistance and candle analysis, and that's it. And that's the end of the day. So let's see what's happening so far. All right, now this was the area of 15-minute support. We'll adjust that again to more closely match the current market data. And then yes, you can do a diagonal trend line here if you want. I haven't got into diagonal trend lines yet, because I too am not a master of it. I don't use it often, but you can do a support and resistance with a diagonal trend line like that. So if you see it hit like that and see it hit as a lower high, then you can connect those two lower highs, and if it ever comes back to that line, you can analyze what the candle looks like and place a trade accordingly. So see here again, it touched it, went down. You could do that. Now I'm not going to get into that right now, but yes, you can definitely do that. However, for now, let's stick to the horizontal support and resistance. So I'll get my price level back. Okay, so we'll put that one. So basically it starts here, so we'll draw a support resistance line here. It comes back down. Now notice it comes close to that line, doesn't touch it, so you want to place a trade. However, at this point in time, when it came here, this was a green candle because it opened here, and when it was coming here, it was a green candle. And as soon as it touched here, if you were confident that this resistance level would hold, then as soon as it touched here, you could have placed another put for any amount of time, and you would have gotten in. Now remember, I usually, if I'm looking at 5-minute charts and I'm doing it at this level of detail, I only predict the first 5, max 10 minutes candles. Okay, so I do it based on the candle. So if it touches here, I have to make a prediction that the next candle is going to be red or green. And based on that, I would place a trade. I wouldn't think about it necessarily going 5, 10, 15 minutes all the time. It all depends on the scenario, but right now I would place a 5-minute trade here. If it touched this again, I wouldn't have placed the trade because this candle, this wick over here wasn't strong enough for me to think that this resistance level would hold. So I would have just been patient and just watched what the market does. So then it stops here, and you place another line there, and then it hits the old area of support. Now with these wicks over here, you notice that this must be a pretty strong area of support, so that when it hits this area and it's coincidental for you at that time, you know the next candle is going to be green, okay, because it hits support, and it's close to the 20 in the stochastic and its level of support. Only thing is, not a big wick, but that's okay. It's a big candle, and usually with big candle movements, you also get big pushbacks. So then it pushes back, and then a nice wick over here. You could do it. You don't know at this point whether it's going to go down or up, so I'd probably just chill out and just wait to see what happens. Now, if it bounces up here, then I know maybe this is also going to bounce over here with a nice wick, and then it just continues down. And see, notice this old support is new resistance over here. So it takes that, touches it, and it bounces down. And you can do the same thing here. The green candle touched it, nice little wick over here with the 5-minute put down. Okay, now you're seeing it live happen in front of you. So this support becomes new resistance. Now these points that you see here, be patient. Wait for these points if you have to. If you feel confident that those are the types of trades that you want to take, you don't have to go into detail like how I went into. Just take the obvious trades. Like if you're in a trending market, then you want to take trades where it comes close to the closing, the opening of the price, or the the last point that it closed, or where the lowest point it went in this example. So here, if you had these two lines, let's remove all the lines here. I'm just going to show you a random trade that you can take without getting too detailed, and if you want to ride the trend. Put a line at the bottom. Okay, I'm just going to pretend as if it came down here, came down here, and came down here. I'm just going to use this point as an example. Draw a line here. Right now, you're at this candle. None of this other stuff has happened. So let's put this all the way here. Okay, so none of this other stuff has happened. You know that it's going taking lower highs, so you know it's a downtrend. So then put a line here and watch the wicks. Okay, so put a line at the opening or closing of the candle right here, and put a line at the lowest point. Okay, the reason why you're doing this is because when it comes down to this point, when it does this, now this is the point that you want to trade. Okay, when it's doing a downtrend, looks like this. I don't know why this does this. Cancel. Okay, so when it does this, a downtrend looks like this. Oh man, I'm just gonna say this is default. When it does, a downtrend looks like this. Riding the trend. Oops, I'm not doing it right. What's wrong with me? I don't know what the hell's wrong with me right now. I'm just really tired, I guess. Okay, like that, like that, like that, like that, like that, like that. That's what a downtrend looks like. It goes down, up, down, up, down. Okay, so you want to ride the trend when it hits, and I've said this multiple times, and a lot of you people are not listening. Here, if you ride the trend, you want to trade here, and that trade there is usually support and resistance right here. Okay, so when it hits this point, goes up, and hits this point, goes up. When it goes up again, it's likely to come close or touch, or even go up a little higher than the old support, which is new resistance. Okay, so that's what you're looking for right now. So let's delete this move. It's all distracting. And so you mark these points down, and now you're watching. Okay, you're watching to see when it stops. Now you remember, you could have had a line here, by the way, but you didn't put that line there because we're assuming that we started right here. Okay, so it goes down. Now you're not trading right now. You're waiting for it to break this. If it's a real downtrend, it'll break this. Okay, so it broke it. And now you're waiting for it to touch, depending on what the candle looks like. Remember, if it closes far below, then you're not taking a trade. If it closes closer with a nice wick, then you can take a trade. Or you can touch it on do it on the touch of this one, or if it touches this, then you have to watch it. So let's just see what happens. Okay, so it looks like it already happened. See, it touched this point right here, and it continued downwards. Okay, so I don't know if this is still trend. Oh man, what is this shit? Okay, so it might still be doing it, but we don't know that. So now we're watching for it to touch this, depending on what the candle looks like, or touch this, depending on what the candle looks like. And this is in real time right now. Okay, assuming it is. Now, see, it touched here. Now, either it's going to go up or down. Now, this candle touched is already a red, so you don't want to take that. It closed far below it. You want to wait for another candle to touch, if it does at all. Now, it didn't, so you would have missed the trade, but that's okay for you to miss a trade. The reason why I didn't take this trade is because it touched and it went down. There's no saying that there's going to be 3 or 4 more candles that go up. That's why you want to be disciplined. Depending on what the candle looks like, you have to take the trade. Okay, so now we're going to see what happens here. See if it touches this line. Actually, we move this line to the lowest of that part, which is here. Now notice that this candle is a green one, this candle was a red one. So this one you would take because it touched it and it was a green candle and closed very close to it, and the next candle was a red one. Okay, so you take a 5-minute put option at that point. Okay, so see, this candle closed relatively far away from that line. So you don't want to take that trade. You want to wait for it to touch, and depending on if there's a wick, to actually take that trade. Okay, so it touched again. It was a red candle. Now if you're a touch trader, you can take it right at the touch. Or if you're a closed trader, you wouldn't take this trade at all. So you get more opportunities if you're a touch trader. See, it touched again and it went down. It touched, and if you're a touch trader, you would have lost this trade. But if you're a open close winner trader, then you wouldn't take any trades because the candles are really small. I remember my rule about small candles. So see, this one right here was a big candle, touched it and went down. So you would have won an area as well. Okay, so on and so forth. I mean, these are random trades. Anyways, this was a combined lesson for daily analysis, and I taught you another type of strategy, which is riding the trend using lower highs and support and resistance. Hope you guys enjoyed. Till next time.